start. I have made this presentation on working of two-tier Mudarabah contract. Okay, so first we will see that what does Mudarabah contract means. Okay, so Mudarabah is known as trust financing. Okay, so why we call it a trust financing? Because in this contract, one party invests the capital and the other party acts as a manager, or we can say that acts as an entrepreneur. Okay, so here we say that in Mudarabah partnership, one party provides the funds and the other party acts as entrepreneur by observing the role of management and putting efforts into the business. So the one party who has the capital, he or she invests the money and provides the capital to the other person who is willing to put his her efforts in the business, and he or she will invest in the invest his efforts in daily activities of the business. So the earlier party is known as Rabb al-Mal because that party has the capital, and the later party is known as Mudarib. Mudarib, why? Because he acts as a investor, or we can say he acts as an investor with efforts, manager, or we can say entrepreneur. Okay, so it is if we see if we make a comparison, it is an alternative to conventional banking debt-based financing. So in conventional banking, we see there is a financing method known as debt-based financing, but in Islam it is not encouraged. So we will see that what Mudarabah trust financing is and how two-tier Mudarabah works in later slides. So first we will know that what are the fundamentals of Mudarabah contract in general. Okay, so there are parties, for example, two parties. There can be more parties as well. There can be situation where the first party known as Rabb al-Mal provides the capital, and there are two Mudarib, two managers. Okay, who act as an active partner. So if we use the conventional terms, we can say that the Rabb al-Mal who provides the capital is a sleeping partner, and the later one is active partner in the business. Okay, so in if we see the fundamentals of Mudarabah contract, you will see that parties share a profit on agreed fixed percentage. Okay, so they first at the time of making the contract, they decide that in this specific ratio we will share the profit. So this can be, for example, 50% 1:1 ratio, okay, or 1:2 ratio, or 2:1 ratio. But it is encouraged, it is preferable as per the Sharia rulings that the Mudarib is the entrepreneur who puts his efforts in day-to-day daily business activities. So he should be given preference when it comes to the more profit. So as per the ayat of the Quran, Surah number 80 and ayat number verse number 20, so Mudarib should get more profit preferably. Okay, so but when it comes to the event of loss, Rabb al-Mal loses his capital. Rabb al-Mal, the one who is providing his capital. So if there occurs a loss, the Rabb al-Mal invested his capital, he will lose his capital or part of his capital. Okay, the other one, Mudarib, the manager, the entrepreneur, will lose his efforts, labor, time. Okay, so also there is one more ruling as per the Sharia principles when it comes to the Mudarabah contract, that the one Mudarib is not allowed, the majority of the madhabs, he is not allowed to get a fixed salary or fixed compensation, but he will be getting the profit as per the predetermined profit sharing ratio. Okay, so and when it comes to the termination of the contract, as per Sharia, there are no restrictions in this regard, neither in Quran nor in Hadith. So it is open. Okay, so they can fix a certain requirement at the time of making the contract, that yes, we will if the ex-partner wants to terminate the contract, he will be giving a notice of 1 month or 2 months. So to save the interest of the other partner, because seeing the present scenario in which we are living, starting the business and putting the efforts into the business is very difficult. So to safeguard the interest of the parties, these conditions can be mentioned at the time of making the contract. Although there are no restrictions in Sharia regarding this, even if they do not mention anything in this regard in their contract can be terminated by any party at any point of time. If at the time of terminating the contract, their assets are in the form of cash, they will be sharing the cash in the form of predetermined profit sharing ratio. On the other hand, if their assets are not in the liquidity form, then Mudarib first will get some time and he will liquidate the assets and they will share the profit accordingly. Okay, so then next, if we see in modern world, in modern Islamic finance Mudarabah contracts, there are usually two tiers, and what does it mean when we say that two-tier model? So we will look in next slide. So there are two tiers in Mudarabah model if we see the present Islamic finance industry. The first tier, the depositor, Rabb al-Mal, puts his money into the bank, and now banks acts as a Mudarib, as we studied earlier in previous slides, that the one who will be putting his day-to-day efforts into the business, it will be bank in this scenario. Bank will be Mudarib, and the depositors are Rabb al-Mal. They are investing their money into the investment account of bank. Okay. Now bank will invest the capital into business and share profit with the Rabb al-Mal. Rabb al-Mal who? The depositors. Okay. So in this case, bank is a Mudarib and depositors are Rabb al-Mal. So the bank acts as a working partner while the depositors are sleeping partners. Okay. Now, this is a graphical representation of first tier of the Mudarabah model. This is depositors, and they deposit their money into the bank. Bank acts as a Mudarib, and the bank invests into the various businesses. This can be mentioned in their contract as well, that what type of businesses the bank will invest. Okay, if Rabal Mal specifies this, that you will be investing in these specific activities, bank will be investing in those specific activities. But if there are no conditions mentioned in the contract, bank can invest in any business except those which are haram. Okay, by nature. Okay, so they will be sharing the profit on predetermined ratio. Okay. Now, that second tier of Mudarabah model. This is very important. So, how it works? That no, in the first tier, the Rabbal Mal were the depositors. They provided the capital to the bank, and now bank. In first case, bank was a Mudarib, but now the bank is Rabbal Mal. Why? Because the bank will be depositing. Suppose, for example, bank 5 depositors deposited their capital into the bank's investment account. Now the bank, who is acting as a Rabbal Mal, invested their capital and provided their capital to the entrepreneurs who are seeking capital to start their business or invest the capital into the business. So they will also share profit mutually. So bank provides capital to entrepreneurs who are seeking the capital. So this is like a second tier. So this is a two-tier Mudarabah model where first depositors deposit the money into the banks, okay, and then bank provides this money to the entrepreneurs, and entrepreneurs invest that money into the business. So in this way, this becomes a two-tier model. Now we will see what are the fundamentals of two-tier Mudarabah model. Okay, before that, I think we should see the overview of two-tier Mudarabah model, how it looks. This is very impressive. That this will give a very clear picture that this is first tier, this is first tier, and this is second tier, and this is a whole two-tier Mudarabah model. Okay, so in the first tier, the Rabbal Mal deposit their capital into the banks. Okay, Rabbal Mal can be more, 1, 2, 3, 4, many depositors can be there. And they are sleeping partners, okay, because they are investing their capital into and providing capital to bank. A bank is acting as an intermediary because and in first case the bank is Mudarib, in second case the bank is Rabbal Mal. They will be sharing the profit and loss, and then Islamic bank is providing the capital to managers, entrepreneurs who are seeking the capital, who are seeking the money to invest in. Okay, so bank provides capital to the managers or the entrepreneurs who are seeking the money or capital to start their business or to invest the capital into various businesses. So they are basically known as working partners, because in this case they will be working and they are known as Mudarib. And in the second tier, bank is known as Rabbal Mal. So they will also be sharing the profit and loss on a predetermined basis. Okay, so this was the whole overview of two-tier Mudarabah model. Okay, so now we will look into the fundamentals of two-tier Mudarabah model. These are general ones. So in the two-tier Mudarabah model, Islamic bank serves as a financial intermediary. Okay, the bank injects the capital of depositors, and so the first the depositors invest their money, their capital into the investment accounts of bank, and then bank injects the capital of the depositors into the various businesses through entrepreneurs or managers. Okay, so bank provides capital to those entrepreneurs who are seeking finance from the banks. Okay, so in this way, this becomes a two-tier model. In first tier, there is an involvement of depositors and the bank, and depositors can be many. Okay, not only one. And in this next tier, in the second tier of Mudarabah model, there are entrepreneurs and a bank, and also entrepreneurs or managers can be more than one. So they enter into this Mudarabah contract on a condition that profits will be shared in mutually agreed proportion in both the cases. Okay, so but in both the cases, one thing is similar, that loss will be borne by the financier. Okay, in the first case, the loss will be borne by the depositors. If we see the capital, because the depositors provided their capital to the bank, so they will bear the financial loss, and bank will bear the its labor loss and its efforts. And if bank injects the capital into various businesses, the bank will lose its capital, and the entrepreneurs or managers will lose their efforts which they put it in the various businesses. Entrepreneurs acts as a manager of funds. Okay, though they are also known as manager of funds. So now this was the overview of two-tier Mudarabah model, which we discussed earlier. Now this presentation is complete, and I hope that I was clear, and thank you.